Converting a single-member LLC to a multi-member LLC might seem complicated, but with the right approach, it's a straightforward process that can help your business grow and evolve. A limited liability company provides protection from business debts and obligations and can have any number of members. If you're currently the sole owner of an LLC and want to add additional owners, you'll need to follow specific steps to ensure a proper conversion. While LLC laws vary by state, the general process remains similar across jurisdictions. In most cases, new members must be documented in your articles of organization, which were created when you first formed your LLC. The first major step involves updating your operating agreement. When terms for adding members are outlined in this document, these are the procedures a person or business must follow to gain membership. If these terms aren't already established, they can be created with unanimous written consent from all existing members, specifying the new individual's interest percentage. When adding new members, it's crucial to clarify ownership interest and voting rights. Your operating agreement should detail the percentage of ownership each member holds, voting power in decision-making, distribution of profits and losses, buyout provisions, and any restrictions on transferring membership interests. Defining these terms early prevents future disputes. The operating agreement can also establish rights for members to transfer portions of their interests to others. New members would be added after the initiating member follows the outlined transfer procedures. Converting to a multi-member LLC significantly impacts your tax situation. A single-member LLC is typically taxed as a sole proprietorship, while multi-member LLCs are treated as partnerships for tax purposes. You'll need to notify the IRS by filing Form 8832 to elect your tax classification. Members will now pay self-employment taxes on their share of business income. If your LLC was previously taxed as a sole proprietorship, you might need to obtain a new employer identification number. Be aware that some states impose different tax rates or fees for multi-member LLCs, so consulting a tax professional is advisable. As the sole member of your LLC, you can establish your own rules for adding members. You might want to collaborate with a business partner, receive funds from an investor, or give a dedicated employee an ownership stake. Following proper procedures is essential to maintain personal liability protection and avoid ownership disputes. Consider both the benefits and consequences of adding members. New owners can contribute fresh ideas and skills, but your percentage of profits will decrease. You'll need to consider other decision-makers' opinions, and it may be difficult to revoke membership status if disputes arise. After adding a new member, update your articles of organization and amend the operating agreement to note their membership percentage. Some states require an LLC to dissolve and reform if ownership changes. If you're operating without an operating agreement, establish one before adding members to ensure profit and loss division is documented. When transitioning to a multi-member structure, you may need to update business licenses and permits. Check state requirements, as some require new licenses for multi-member LLCs. Update local permits, modify bank accounts, and inform creditors and clients about the ownership change to maintain compliance. LLCs benefit from flexible ownership structures where a member's ownership percentage doesn't necessarily correlate to their profit share. When terms are agreed upon, amend the operating agreement with the new member's name, capital contribution amount, ownership percentage, and profit and loss allocation. Ratify this amendment with a formal vote and file it with your other LLC documents. Your revised operating agreement should detail each member's roles and responsibilities, capital contributions, dispute resolution processes, decision-making authority, and procedures for dissolving the LLC if necessary. This legally binding agreement prevents future misunderstandings. Most states require notifying the Secretary of State with amendments to your LLC articles of organization. In some states, you must file an annual member and manager list that can be updated when adding members. State filing requirements typically include submitting amended articles of organization, updating annual reports, completing state tax forms, and in some states like New York, publishing ownership changes in local newspapers. Failure to comply with these regulations could result in penalties or business suspension. Converting a single-member LLC to a multi-member LLC involves several important steps. updating your operating agreement, securing written consent, documenting new members properly, notifying tax authorities, and complying with state requirements. While the process requires attention to detail, proper planning ensures a smooth transition that positions your business for continued success and growth.